So this is a Founders Get Funds session, and this happens every Tuesday at 6 p.m. Eastern. We bring on different finance experts, founder supporters, funders, a lot of different voices for you to learn more about how you can get funds. And today we have a Founders Get Funds OG. You've been at the e-commerce extravaganza. You've also been at several Get Funds sessions. I mean, I think it's right that you introduce yourself at this point.
No, thank you. Yeah, no, so my name's Christian. I work in wealth management, and my passion is helping entrepreneurs get access to funding. So this is building your business credit score. This is building a relationship with lenders. This is understanding exactly how to use finances to expand your business. And today I hope to bring additional value. I always appreciate being on your platform because you always have a really great audience who's really involved and engaged. So I'm excited to be here.
Of course. And today we're talking about really some lending options that can allow you to borrow from your business transactions. And I think that before we go into those interesting platforms that we kind of shared in the promo, we could talk a little bit more in regards to how do you get a business bank account, because people don't always go into doing that. They really stay within their personal bank account, and maybe even talk about what are the benefits of setting that up.
Yeah, no, that's a great point. So actually one of my friends was in my DMs the other day based on something I posted, and they asked the question, well, should I set up a business account? Should I set up an LLC? And I always find that those are two separate questions. So a lot of the funding that you can get from a business, you can get through having a sole proprietorship. So you don't need to take the step of putting an LLC around your business. But if you do take that extra step, a lot of times lenders will be more likely to give you money. And what we'll focus on today is they'll give you money that you don't have to personally guarantor. And so that's kind of what I would consider as the holy grail of funding, because if something goes wrong with the business and COVID-19 happens and your sandwich shop is not allowed to sell sandwiches anymore, the worst thing that could happen is all that debt that the business has incurred, you would now be responsible for paying back. And that can put a lot of financial stress on people. A lot of people go bankrupt because a business goes bad. And so it's really important to be able to separate that separation. And so when you bring up, should I set up a business bank account and how it works? The first answer is yes, you should, because it separates that liability. So if the business goes down, you can say, well, the business was housed here in this specific account. If you can't show that all your business transactions happened in a separate account, a lot of lenders will look at it and say, well, you are the business. So all of your money, your paycheck, your hard-earned dollars will also be sort of included in any debt you owe for the business. And then to get to the how. So I work at a bank, so I open up business accounts all day long. The first thing you'll need is an EIN number. Go to the IRS website, you apply for one, you can get that for free. Once you have your business bank account set up, you'll need your EIN number, you'll need some sort of proof that you're registered in the state, and then you'll need an operating agreement, which is basically your Bible for your business. It says what you can and can't do and who owns the business. And then once you have that paperwork set up, then you can go and get your DUNS number, which is it's kind of like your lending number. A lot of lenders will look at that number to see what's on your business credit profile. Can you hear me better now?
No, I can hear you great. It was
okay,
just a split moment there. And that's some great information. I think that a lot of times founders may not think about that until they go and apply for funding and they start to ask for a lot of documentation. So are those the things that you will be asked to present in the time of applying for a loan?
Exactly. So what they ask if you're an existing business, which people need to make sure they understand, is if you're an existing business, especially you've been in business for the last 2 years, the first thing they're going to ask for is your business tax return. So I always like to keep mine handy because I know that it's something that lenders will always ask for. And then they'll typically always ask for some sort of income statement or balance sheet A lot of times, if you use a payroll company, they'll automatically have this information. Or if you have a CPA, they usually have the ability to create these type of documents, and that's all gonna like paint the financial picture to help you get approved for some type of loans.
Yes. And really talk about this financial picture, because I think that this is a question that founders get funds hints at a lot. There is, I mean, we don't have to say red tape, but there is some sort of requirements that you need to have in order to access funding. And I think that this current situation with the COVID-19 pandemic has really highlighted that. So can you kind of talk to that disparity that we see?
Yeah, so the first thing I want to kind of talk about, because a lot of people have been asking me about it, and it kind of has to do with Donald Trump's tax returns. So it's been sort of on everybody's mind. So I'll start there. If you have two options as a business owner for most small business owners. If you take in more money than you spend, a lot of people will then have a profit. And then what you can do is you can either include more expenses, decrease your profit, and you don't have to worry about paying taxes, or you can even get a bigger refund, but that would mean that your business lost money. If you're gonna make the statement that your business lost money and save money on taxes, then unfortunately, most of the time you're not gonna qualify for business funding. On the flip side of that, if you decide to not lose money in business and not add a whole bunch of additional costs to your business and run a lean business, your business will make money, you will have to pay taxes, but you will get access to funding. So with a lot of business owners that I work with, a lot of the times is you have to figure out, well, how much money do I want to claim for tax purposes? And if I'm going to claim an income for tax purposes, how much money will that give me access to? Versus if I claim a loss, how much money am I missing out on? And so that's kind of the conversation that you kind of have to think about as like you plan for your businesses long term, because I think sometimes we want to do what's best in that moment, which is save money on taxes, when it could be in your best interest to make sure your business is actually showing a profit each year, so that it's easier to track investors and it's easier to attract different banks and things like that. So I would kind of start there. You're at the end of the year, when you have your profit and loss, make sure you make the decision that's best for you. The second thing that banks want to look at when funding your business is what I like to call liquidity. So very simple, how much money do you have? When you're looking to apply for a loan, banks want to see that you have a good banking relationship, so they will always ask for what they call references from other banks. This is just going to show that your account hasn't been negative. This is just going to show that you haven't bounced any checks. This is going to show that your balances are above a certain threshold. And if you do have quote unquote money in the bank, there are plenty of lenders who will always give you money. And so a lot of times, just those two things, your tax returns and your current banking relationship, that's really going to play a big part in sort of like whether you can get it approved for funding or not.
How can you really start to look at those financial options and make a business decision? And you can even start to hint at maybe some of the lending options that we're going to talk about today.
Yeah, that's a great segue. So if you make a decision that you want to get access to different loans from banks and from other sort of startups that will lend money to your business, the first thing you want to do is make sure your business is set up properly. We talked a little bit about it earlier, meaning you have a business bank account and an LLC, but you also need to make sure that you have, if you have a set, that you have that set up. It can't be a PO box. So a lot of lenders prefer to lend to a specific location, whether it's a home office or a brick and mortar. The other thing is you want to make sure that you have a website. Even if your business doesn't have a large online presence, it's still important that your business has a website, because what happens is lenders want to be able to look you up to lend you money. And so if they type your name in Google and nothing comes up, it'll be much more difficult to get access to money later. And then once you have all those things, you want to make sure that you have a professional email. Banks, unfortunately, take all those things into account. I work at a bank, and one of the things we're always cautious of is people trying to do fraudulent activity, meaning they're pretending to be a business when they're not actually a business. And so the more official your business looks on paper, the more likely it is for you to get funded. So if you're going to start a business like Christian LLC, I would make sure that my email address is, christian@christianllc.com rather than christianllc@gmail.com. Those little things can be the difference between passing or failing underwriting for businesses. So it's really like making sure that if I saw your business, if I just went online and I Googled you and I looked at your online presence and I looked at nothing but your application, everything tells me that you're a thriving, successful business, and that you're as legitimate as an Apple or Google or Facebook.
So can you talk a little bit about why you might want an option like PayPal or even Kabbage or Stripe when you're looking for a business loan?
Yeah, so I think the first thing to understand is the traditional world of business lending and sort of how the shift is slowly happening over time. So I started looking at business credit really intently back in 2013. And back in 2013, everybody was selling these business courses, sign up for my business credit course. And what they would do is they would give you a list of vendors, and they would have you go through that first step that I talked about, where you set up your website, EIN, bank account, all that stuff was the same. But they would have you go through this list of vendors. Some of them are vendors like Granger, Network Solutions. These were net 30 accounts. So you would apply for credit. The vendor would give you basically store credit you could only use at their store. And you had to pay it back within 30 days. And if you did that, meaning you spent money at these specific vendors, you would then get a business credit score. And then once you got a business credit score, you can then take that business credit score and apply for another 5 or 10, maybe even 15 lenders total. So you're buying stuff from these 15 places, and then eventually they'll give you access to unsecured credit. For most people who go through all those steps and spend all that money, that could take a year before you could see any real money. And when you can see the money, most of it will be personally guarantored in the beginning, but even if it's not personally guarantored, it will be sort of like a revolving line of credit from Costco or Office Depot or places where most business owners today don't really shop. And so that is basically what the business lending world was like. And over the last probably 2 years, PayPal, Kabbage, Stripe, they've changed that completely. They've said that the easiest way to lend money to someone is to have access to their bank account, meaning I can see the transactions going in and out of your account. Or if you're selling on my platform, then I can see how much money is going in and out of your account. Because I know how much money is coming in and out of the account, it's a lot easier for me to lend, and it's a lot easier for me to get paid back. So for any entrepreneurs who are currently using PayPal, Stripe, if you go on there and you've had a couple successful months selling, you'll notice that those lenders will offer you credit. They'll offer you a loan or a line of credit at a specific interest rate. It's typically significantly lower than anything you'd be able to get anywhere else. And they're lending specifically to your business and not your personal. And it has nothing to do with your personal score. And so that's why the whole industry has changed completely. You can get a line of credit skipping all those additional steps that you used to have to do in the beginning just by selling your product to a lot of consumers.